Welcome back to the Halftime Report. I'm Bob Pisani. Time for ETF Edge. Retail catching some relief today after the Trump administration made a deal with Mexico to avoid tariffs. Retail ETFs, including the popular SPDR S&P fund, ticker XRT, heading higher on the move after getting hit hard the last few months. Joining us to discuss now, Tom Lydon from ETF Trends. Christian Magoon is the founder and CEO of Amplify ETFs. They've got their own ETF focused on online retailer. The ticker is iBuy. I'll get to that in a minute. But, Tom, it's been rough on top of all the usual problems for retailer. Then they had the tariff issues with China. The XRT, which is an equal weight index, dropped 11–12% in May. It's making a comeback now, but still hasn't done much this year. What should we do, even assuming we get some resolution down the road on China and Mexico?
There's not much traffic at the big boxes. Remember, Bob, when you and I grew up, we used to hang out at the mall all the time. You go there now, our friends aren't there anymore. So these are one of the things I think more and more we're using online purchases. I know the Amazon boxes are showing up at our house all the time. I know you're doing the same. I think this trend is continuing. One thing, though, we're seeing more auto buyers that are falling into this retail index, which I think is interesting. That whole model about buying cars was broken. Now retail buying in cars, I think, is one of the bright spots in the retail index.
And Christian, your answer to all of this is just stick to online retailers. You actually founded an ETF, iBuy, that specializes in just online retailers. You own Shutterfly, Stitch Fix, Wayfair, Etsy, PayPal, and that's outperformed. That's up 20% so far this year.
That's right. So we think it's clicks over bricks. iBuy has been out for a little over 3 years. During that time, it's delivered about a 95% return. Brick ETFs is like XRT is actually down during that time period. This is where the growth is happening, Bob. It's moving from brick and mortar in-store visits to online. It's not just happening in the U.S. It's happening around the world. Growth is about 20% on average in the online retail space.
And Tom, to go back to the equal weight versus market cap weighted, XRT is an equal weighted index of a lot of companies.
Right.
RTH is only the 25 largest by market cap. That's really done better this year because Amazon's up 24%. You get that in it drags the whole index up. So market cap versus equal cap, we always fight about this.
You always do, so you live and die by the sword. I think what Christian's done here is by having a select amount, by having them equal weight, you're not taking any big bets. And then finally, as we talked earlier, there's a clicks ETF, which is long online and actually short big box, which is pretty creative.
And that's the one that's done better this year. It's up 30%. There's the one on the bottom there, 30% for the year. So that's really the big winner. The clear short is to short the stores and go long the online guys
That's right, because there's sentiment in the brick and mortar that goes way too far over. Clicks shorts it and has profited at times from it.